Hey you guys, how are you today? Good, great, wonderful, excellent. I just knew that you would say that. If this is your first time joining me today, let me be the first to say welcome. And if you've been here before, welcome back. My name is Rainori, but I go by Rainy like a rainy day, and I am a local realtor in the Tampa Bay area, and I am a board certified credit repair consultant. Today we're going to talk about repossessions and how they can affect your credit scores. I have my notes here, so I want to make sure that I stay on task, okay? So first off, what exactly is a repossession? A repossession is when the lender who has a security interest in property decides to seize or take back that property, usually due to a non-payment. And when you signed that agreement with that lender, you made 3 promises on your loan. The first one is that you would pay back your loan personally, that if you didn't pay back the loan, that the lender will be able to take it, sell it, and pay the loan off. And then number 3, that if the assets that the lender took is not enough to satisfy the coverage, that you would still be responsible for the remainder of it. Now, there are also 2 different types of repos. There is a voluntary repo, meaning that you decided to give the car back to the lenders. It could be due to financial reasons. I've also had a couple of clients say they did a voluntary repo because the car was not working or it needed some major work and they just did not want to, didn't feel that they would be responsible for paying on it. So those are some different types of voluntary repos. An involuntary repo is when they come and seize the property from either, you've seen it on the TV shows, they can be at a home, at any type of business establishment, but the tow trucks come in, hook the vehicles up, and then they're on their merry way. But what are the different types of items that can be repoed? Not only is it just cars, it can be appliances, it can be furniture, it can be other motor vehicles like boats, motorcycles, as well as homes. But usually when you think about a repossession of the home, it's more so called a foreclosure. And what happens when a home is repossessed? Well, the lenders still want their money or want the items to be paid for, so they will do a resale to try to get as much money as they possibly can. Depending on your state, they may be required to send you a letter or notification letting you know exactly what's going to happen with the vehicle. If you are in that state, you will receive a letter. They'll let you know if it was going to be auctioned off. And as a consumer, you have the right to go to that auction. And if you have the funds, you can purchase that property again. Now, be mindful though, if you're going to those auctions, 9 times out of 10, they're only going to accept cash on hand. Once the vehicle has been paid off due to the lender reselling it, sometimes there's some type of deficiency, or meaning money that's left over. If there's money that's left over that needs to be paid, that is what you as the consumer is still responsible for. So not only have they taken your property that you once were paying on, they've taken it, and then you still have to pay, you still may have to pay the remaining balance on that. So how many points does the credit score drop with the repossession? For an involuntary repossession, it could drop it between 50 to 150 points, and that will stay on your credit score for up to 7 years. For a voluntary repossession, it can affect your credit score up to 100 points and also can stay on your credit report for 7 years. With the involuntary, make sure you also be mindful on both of them actually that late payments are the #1 thing that affect your credit score. They account for 35% of your credit report. So what are some suggestions that you can do to kind of avoid having a repo? The first thing is, before you purchase any type of property or get yourself in any type of agreement, just make sure you kind of have a general idea on your finances involved. If your final goal is going to be to make a bigger purchase within the next few years, such as a home, be mindful of the monthly debt that you would need to make that payment, because your debt to income would need to be accounted for your mortgage loan. Also too, make sure you have some type of emergency funds. Due to unforeseen circumstances, I actually have had clients who have lost jobs, or the primary breadwinner has passed away, or just due to life itself, and they are no longer having those jobs. But you just want to make sure that you have some type of emergency fund to be able to make up those payments if you can. You would also want to make sure that you are communicating with the lender. One thing you don't want to do is to avoid them, because when you're avoiding them, that is just giving them more ammo and more reason to come and do a true out repossession where they're seizing your property. Have a conversation with them. See if there's any type of way that you can make some type of arrangements. Sometimes they have programs where your missed payment could be tacked on to the end of your agreement. But before you make any type of new agreement with the lender, make sure you have everything in writing, and just make sure that your finances will be able to handle things. So that's why it's important that you jump on things ahead of time so you don't have multiple late payments on your credit report. Well, I hope you were able to take away something from this video. If you have any questions or need assistance with repairing your credit, feel free to go to our website, www.creditscoreplan.com. And if you are a DIYer and want to repair your credit score on your own, you can also check our DIY Credit Repair Made Easy manual that is also on the website. Well, until next time, be blessed, and we will see you in the next video. Bye.